What's going down, investors? It is July 13th again. Making a video a little bit sooner after the market day today instead of like after midnight. So I'm gonna go. This is an account review video because it's a weekday, so we got to do the account review. Got to log that in, make sure I put it on record. And we'll talk a little bit about, I guess, the inflation numbers since they came out. Everybody's panicking about it. People have different opinions. I'm gonna go over them real quick and see if we can learn something. But before that, I got to do a full review of the account as usual. I'm gonna go with the 178,000 here, down more than a couple grand, which is about percentage-wise on par with the market. So to answer my own question as to what's going down, it's the markets and my account. So there you go. On the right here, you see all the options positions, which I guess are going to expire worthless pretty soon. A lot of them at the end of this week, if things keep the status quo. By the way, it might not keep the status quo because there's a lot of earnings coming out. Like tomorrow, I think maybe Citibank, Wells Fargo, or something like that. Some of the financials are coming out with their earnings, and it's going to move the markets. So expect some volatility, maybe up, down, sideways, but it's going to move. Sideways, get it? It's not going to move. Anyway, so options, and then you can pause the video at any moment to try to figure out the exact positions. You can just read everything in this little box, tell you everything you want to know. These are leaps, Chinese leaps. So this is the equity positions here. Apple is down 1%, mostly after hours, and that's why my account is down as well. It's dragging it down. Realty income down 2%, dragging it down. Main Street Capital not down. I actually wanted to kind of go below 40 for this weekend, so I get to keep my shares, but it doesn't look like it's going to do that. I think it's going to stay over 40 into the weekend, and I'm going to lose 100 shares. I try not to sell this position, but I actually bit off too much more than I wanted, so I'm going to be happy with the remaining 851 shares, 52 shares, instead of 900. Although the dividend I'm getting from this company is now really juicy. Look at this. $204 every month. This is every month. It's not quarterly. It's monthly. Not every 3 months. Every month. 204. Right? Double that by how many months are in the year? 12? What's that? 2,400. Compounding. You know what I mean? Yearly salary. I'm getting $2,400 yearly salary if I keep this position. Why not, Okay, so Main Street Capital, Goldman Sachs, down 1%, not good. I need this to reach 310. I'm really hoping for like an upside surprise because everybody's so pessimistic, right? Everybody's so pessimistic on these bank earnings that they're going to miss, and they've already priced down like 30-40% less earnings than they had, like previous time this year or last quarter or whatever it is, year over year or quarter Q over Q, and it's really negative. People are very pessimistic on it. So any kind of upside surprise, I think, is going to really move the markets. Hopefully, Goldman Sachs reaches that 310 level because I'm okay with getting rid of about 100 of these shares. As you may have noticed, I have a 310 strike price call sold, so which means that once the price reaches 310 by this Friday, if it does, I'll be selling 100 shares automatically. So I'll be left with only 40, which I'm totally fine with. I'm okay with raising some cash right now and reducing my debt because I'm leveraged. Okay, Paramount. Down 0.7%. So a little more detail on this position. It's about $30,000 worth. Average purchase price is $28.73. So I'm in the red by quite a bit. I've been trying to sell $30 calls, but they're worth almost nothing because I have to sell them really far out. So I have to wait a long time and not get much because I'm so far from the strike price. But that's some of the risk you take when you take on the collateral. That's the risk. That's the price you pay, as dead money. All right, that's it. Let's go to the investing tab next. Investing tab, you'll see that the margin is about the same as yesterday. A little bit more percentage wise because my account went down in value. So as the account goes down in value, the margin as a percentage of the account increases, right? They don't care. I don't care. So total return on stocks, $20,000. Apple, Main Street, 2,700. And then realty income account sorted by equity. Biggest position is Apple at 119 and $810. Second is Goldman Sachs, 40K. Main Street Capital bringing in the back with almost 39K. And then Paramount Global, almost 30. And then Realty Income, 25. Smith & Wesson, 16,000. There you go. Those are the positions. Next, we're going to look at relative performance. So today I'm about equal with the markets. Let's take a look how I'm doing in a week. The week is down 1.74. 1 month is up 8.82. 3 months up 1.17, almost flat there. 1 year should be about flat, negative 0.3, so flat on the year. I'd like to compare that with S&P 500, which is represented here by the SPY, which is a nice proxy. It's an ETF comprised of the top 500 profitable companies for over 4 quarters, something like that, whatever their criteria is in the United States. And the 1 day performance is about the same as mine. 1 week, they're negative on the week, 2.25. I was negative 1.7. On the 1 month, the S&P is negative 0.025. I was up. 3 months, they're negative 14. And 1 year, I was even on the year. S&P 400 is down 13.7. I was down just 0.3%. So outperforming the S&P by quite a bit, but it hurts that account is just not gaining in value. I really want it to gain in value. Like, I don't want to just tread water here. I am in competition with the S&P 500, but I really want to be in the green. Like, I want to be making money each year. So it has not been optimal as of late. I'm trying to make some moves though, selling some calls, selling some puts, raising some cash, trying to make up some ground, but it's really difficult. This market's not very premium high. So what happens is the reason why the premiums are not so fat is because there just isn't a lot of demand, and the reason there's no demand is because everybody's made their purchases already. Like, everybody's so insured of this downside. People think it's Armageddon is coming, and it could, and that's fine and dandy, but you gotta also price in the fact that there's some upside in there. Like, it's what I'm trying to say here is that it's the banks are not issuing, the market makers and the the people who are writing the contracts, they are I guess they're flooding, but there's just not enough interest in it. The reason there isn't enough interest because people have already bought protection over the last few months, so they're issuing. No one wants to buy them. There's just not enough demand, even for insurance. So that's why the premiums are low, and I'm having a hard time collecting any of those premiums because they're low. I don't know. I didn't explain that very well at all. Moving on. So this is the relative performance. What else was I going to show? Inflation. Okay, so the inflation numbers came in, and that is a really big deal. As I mentioned yesterday, I think the markets are really looking forward to that. And there was only 1% change in markets, so they weren't really that surprised. I think it's mainly because there's a bit of a mixed interpretation of the numbers themselves. So here is the Bureau of Labor Statistics, and to make it a little more clear. Okay, so we're looking at these top 2 boxes, okay? So the headline inflation was 9.1%. So you can see the major categories here combined 9.1%. If we break it down a little bit further, major categories: food. Excuse me. Food is 10.4, so a little bit high. But as I mentioned before, fuel costs actually contribute quite a bit to food inflation. So if it costs you a lot to transport it from place to place, you're gonna pay up. Not only does it cost more to transport, but to produce as well. You use oil, you use energy. To package, you use oil, right? You use energy for all kinds of things in the food packaging process. So especially things that are being like shipped to stores, packaged goods, they're probably more expensive. As Pepsi came out early and mentioned that inflation is like causing them to adjust their business a little bit. So that's not totally surprising there. The other category, of course, is energy, 41.6%. That's massive. Okay, huge number. There's many reasons for that. One of the reasons is the war. Especially when one of the biggest oil producing countries in the world is at war. That's not good. And not only that, but that country is next to the other biggest producers of oil outside of the United States, which are all in that area, and they're nervous. And then what else? Oh yeah, underproduction. Underinvestment in oil, drilling, exploration for years now. And that is a systemic problem. That's like categorical. It's a huge problem. Way over investment into like electrical build out and alternative energy, and extreme underinvestment in oil. The third problem is supply chain issues, trust. So countries are having a hard time like organizing tankers. They're having a hard time trusting each other whether something's going to get delivered or not. Like, at least we don't have Sudanese pirates anymore, or perhaps there are still, I don't know. But the point is that supply chains are disrupted still. They're trying to work out through the issue. So energy prices are, they're high. They're very high, higher than they've ever been. I don't know about inflation adjusted, but certainly in recent memory. So all items without food and energy is 5.9, which is actually a decrease from last report, I believe. So let's see the last one here. Well, I'm not gonna search through it. Maybe you can search through it if you want, but maybe it's an increase. But either way, inflation is increasing. It's true. However, I think that commodity prices are, have been dropping, including oil. I mean, I'm just looking at oil right now, and we're talking about past 2 weeks. So I'm looking at oil. Why don't I just look at it over here so you can see what I'm looking at? I'll just go to Yahoo Finance. Go to Yahoo Finance here, and it tells me right here. So the markets are down, the futures are down. Silver, gold, and we're gonna get to oil anytime now. Did I pass it? Oh yeah, crude oil here on the left. So it's 95, 97 at the moment. This thing was just 120 like a week ago. Let me do this so you can see. Look at the 5-day chart. It was just 105 on over the weekend on last Friday. Look at the 1 month chart. Do you see what I'm talking about? This is June 14th, 122. Now it's 96.2 or whatever it is, 96.08. You see what I mean? So spike here, and then it looks like a topping pattern here. I'm not a chartist, by the way. This is the 1 year chart, 5 year chart. Could be just a correction. I don't necessarily think that oil moves like that though. I don't think it's like obeys, standard pattern cycles and bull markets and bear markets. The commodities are like, they're very much externally controlled and not psychologically controlled. They're demand, supply. Like if there's supply issue, price going up no matter what. Doesn't matter what the psychology of the consumer or of the people who are trading is. It's very different than like other markets like equities and bonds and whatnot, where almost 100% of the movement is due to sentiment and whatever people's opinion is, right? So it's a little bit different. So it doesn't really follow technical patterns per se, at least not in the medium to long term. I know that in the very short term it can follow some technical stuff, but it's mostly, in my opinion, a self-fulfilling prophecy of the traders who are currently involved in the market. So they're kind of, they draw the lines and they kind of abide by their own lines, if that makes any sense. Like they're not just trading when they need oil or when they want to sell it, if that makes any sense at all. Okay, so listen, that's today's recap. Logged in the account. So I do these, if you've never seen this before, I do these every week to keep track of the account. I'm trying to get to 1 million. It's been very hard this year, especially. Last year was all right. 2020 was all right. So the previous years, I've had winning years all the way up until like 2018. And that's when I started, August 28th, 2018. I'm trying to get to 1 million. It's been very difficult. Okay. I expected actually to reach 1 million already, but I guess I need to adjust my style or take more risk or something. So I'm continuing on. I don't know how long it's going to take. I don't want to take too much risk. I may have underestimated my abilities. But anyways, I'm doing this. It's my journey here. You can feel free to join me on the journey. I hope you're having a similar journey. There's no reason why all of us shouldn't be millionaires like we should. So start investing. I don't know what you're doing. Why aren't you investing more? Like, I actually haven't been able to put money into the account in the last year or so. So just riding off of what I have. That's why the percentages look so big, because all my gains are just through actual gains, not me putting in money. Let me show you here the all-time chart so you can better see what I'm talking about. So I started investing somewhere here in August 28th, 2018. So this is total money I've been putting in, but most of those gains happened without the extra money anyways. So I put a lot of money in here in 2020, end of 2020, right here where I was already rising anyways. So a lot of these gains are made on, $30, $40, $50,000, but I guess total money included into the account is $72,000. So about 146% gain so far, which is not bad, but it should have been better. I've been as high as 190. So, but anyway, as I started saying, I've been trying. It's been very difficult. I know it's been more difficult for some, especially if you're investing in the like tech sector and PayPal's of the world and like the DocuSigns and Zooms and whatnot. They've dropped like 75, 90%. So I know it's been more difficult for you, but learn and continue. Just like me, I take losses and I learn and continue. I've lost over 90% of what I've invested before when I first started investing. I've lost thousands and thousands of dollars on like gold and silver miners and things like that. So make some mistakes, learn, move on, keep investing. Like, don't give up. So that's what I got to say about that. But anyway, I do these now weekly apparently and not weekly, daily. And I log in my account. I want to make sure that I accountable to myself. But I also do little company reviews and I show you like the initial process of how I pick stocks. Not that I'm some guru that you should learn from, but just to give you an idea, just to give you a perspective of like another person. Well, that's my process and how I started. I do a little shallow dive into the company that I like to see if I'm interested or not. And if I'm interested, I dive deeper. And the deeper dive involves many more steps. But I do shallow dives where I kind of look at the charts. um, their numbers, their revenues, the profits, whatever, their margins, etc. And I make a judgment of whether I like the company or not. So I've actually made quite a bit of those already, maybe 15 or 20 of them. You can go check them out. I've reviewed, I've been, done a shallow dive on companies like PayPal, Tesla, GoGo, some obscure ones. What else? Rivian, some of the, Palantir, some of the more well-known stocks like, Rolls-Royce and things like that. So go check those out if you're interested in companies individually. And I'll continue to make those on the weekend, so look out for them. And with that said, I think I'm about done here. I've been rambling on for a while. All right, good luck. Hopefully you made more money than I have. I'll see you next time, I guess. Peace out.